Now let's look at a high time frame reversal trade. So we can see here that the market is clearly uptrending on the 4-hour time frame from this low point where we have higher highs, higher lows, higher highs, higher lows, and so on and so on and so on. Eventually the market hit this area here and actually started to stall out. We've had a higher low form in around this level, but what we then see is price pushes through that and makes a bit of a lower low. So from this point, we could actually begin to look for some shifts in the trend by going to the lower time frames and eyeing up, right, either we are going to push over this previous high and then we can continue with the buying, or we are going to push under this low as we have just seen, and then we can start to sell. So those are the two opportunities that the market would really present to us. And then from there, we can actually start working with that. And what we can look at is where are the high interest zones? So I'm going to go to the 30-minute just for a little bit more clarity. And that's going to tell me that the high interest areas to sell from are going to be this point here, this imbalanced supply zone that really brought this first little push down. And then also, if we want to go for the extreme zone, this area as well is going to be of interest. So we could also consider, and we may have also considered this area, but we wouldn't have taken a loss here because we didn't get any confirmations, right? So these are confirmation-based trades. Obviously, you could risk entry with them as well, but we're going to show confirmations because I want to show you the whole process before we start applying it. So we see price break this low. This is the first lower low. And then what we can consider is if the market pushes into this area or this area and then starts to reverse, we can then sell into that in a kind of continuation fashion. So we are essentially looking on the high time frames for a high time frame reversal to then get a kind of confirmed continuation move in on those lower time frames. So letting the market play out, we actually see price push into that supply zone. Now, at this point, we wouldn't really want to sell straight away. What I would first want to see is obviously a break under some significant structure. If we can get that, we could then begin looking for shorts. And as we see here, after hitting that high, we form obviously higher low, but then we form a lower high, then a lower low, then a lower high. Nothing is confirmed until we break through that point. And then what we've seen here is a break of this low time frame structure and also looking like we are coming in to break some of this higher time frame structure as well. So from this point, we could then begin to look for some selling areas. And what we're going to see here is the major selling area, which is an imbalanced supply zone, is this 10-minute area up here, because this is where the large push really came from. Then we stalled out a little bit, but don't get too confused. When we have an imbalanced area like this that sells off and pushes through into these first initial lows, and then obviously towards these second lows as well, that's the area we're going to want to look at. Why? Because it's the first area that broke significant structure, with the significant structure being these little stall out points where we consolidated, and then broke. So this imbalanced region is where I'm going to want to target for my entry. We could even look here for a refined entry there. And what we could then do, because we have the structure confirmation, is go ahead and place an order. Now, what you can do if you want to is go even lower to the 1-minute timeframes and so on and get even tighter entries. But we don't need to do that. We can actually just roll with what we have here on these, the 5-minute, 15-minute, and so on. You don't even have to go as low as the 5-minute. Obviously, I think it was the 30-minute there did give you a nice entry, or the 10-minute gave you a good entry. I believe the 15-minute also would with this supply candle. But by refining lower, you get more precise entries, right? So let's say then we want to sell here. We're going to keep our stops above the high, which is going to be a very small stop loss of around 4.6 pips. And then what we can then do is extend the target down based on those higher time frame levels. And we could look here if we're looking for a reversal. The first area we'd want to take profit is probably around here. But if we're looking for a reversal, we can target some of these deeper imbalanced price zones. So for example, let's bring price into this imbalanced price zone. And let's say this is our major target that we're looking for to see this trend reverse. If we then allow the market to play out, we will see that we very precisely get a tap into our entry point, which is that refined 5-minute supply zone. And from there, we sell off very, very heavily. And that is exactly what we want to see on a nice reversal trade. So letting the market now do its thing, we will see that it sells off massively towards some of those targets. And obviously the stop positioning and management would make sure you ensure a profit, even if the market doesn't play out entirely as you want it to. But as you can see, this reversal trade allowed us to get a 23R movement to pull into this demand zone here. So as you can see, that is an amazing risk reward ratio there. Very, very big profit potential by using this 1 hour or 4 hour reversal in the top of a 4-hour trend, but then actually executing with more confirmations on those lower time frames to get a very pinpoint entry to the movement. And that is a high time frame reversal trade. So now we're going to look at some of the low time frame trades, and from there we will look to apply the methods we've learned onto the charts so that you can start to catch movements like the ones we've been highlighting so far. So I hope you've enjoyed this video. I hope you're getting a basis for the methods in action. Obviously, if you are not proficient with this right now, that is entirely understandable. We haven't actually looked at the processes of applying it yet, but I just wanted to show some examples before we start getting into that, so you can expect the kind of actions we're going to be looking for in the market. So thank you for watching, and I'll see you in the next video.